Welcome to Investors Insights, episode number 128. Today we'll be discussing earnings season, the IMF meeting in Peru, and then also answering some questions that clients emailed in last week. If you like what we have to say, let us know. If you don't, let us know. So let's get started.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at Five Plan Partners.
3, 2. First thing I want to do today is answer some client questions. And we had some clients nice enough to email some questions last week. And so let's start off doing that. The first question was regarding oil. And oil last week broke through $50 a barrel. And so the client asked us, what was making that happen? Really, there's three things. One is geopolitical risk, Syria, Russia invading Syria. And then also the dollars being weighted down by the Fed in the Fed minutes. Right. And so obviously oil is priced in dollars. With the dollar being down, this more affordable, build up the price. And then also falling U.S. production has something to do with that. So also the second question is, with all the negative things around the world, China, global slowdown, the Syrian war, politics getting nasty, where is the good news? What is the good news? Where is the growth coming from? And so there are a few things we want to discuss here. Unemployment is a 7-year low. Inflation-adjusted incomes are up. Consumer spending and consumer sentiment is up. Car sales are at a 10-year high. Gas is pretty cheap, and the housing market continues to be strong. And so there's some good news.
Definitely some bright spots.
And there's some good news there, and so we appreciate the questions. Now we want to talk about earnings. Trey, you had some really good points on earnings.
So for the last few months, I feel like all we've been focusing on is the Fed and politics, kind of macro stuff, and it feels good. Earnings season's about to kick up third quarter. We'll keep one eye on the Fed. But we're going to focus very heavily the other eye on earnings season. This earnings season, Q3, is going to pick up strong this week with financials. But it looks like the expectations are for a negative 5.1% year-over-year earnings growth. That's the first decline since 2009 if that holds. These are expectations, not reality yet. As the earnings come out, we'll see if that beats. Now, that sounds like a really bad number. But majority of that decline comes from the energy sector. In fact, 6 out of 10 S&P sectors are expected to have growth in earnings, not decline. So it's really kind of looking like a bifurcated economy where you have energy and materials really kind of slowing down, especially year over year. Remember, this time last year, oil was much, much higher. And so as time goes on, the earnings will compare it against lower oil prices, and it'll start to shake itself out more. But we'll watch closely. Financials will be big this week. We're looking for, are these expectations too low? Because, if you have decline, it's not necessarily whether or not the earnings decline, it's whether you beat your expectations. If earnings still shrink at, let's say, 4%, that's still an earnings beat we think could be positive for the markets. And especially to Bobby's point, there's definitely some very positive parts of the economy where we could see some growth, see some surprises, and then you could see a really strong kind of fourth quarter built on what we actually like, fundamentals, the companies, what people are making, who's selling what really drives the economy, not is the Fed raising, is it lowering, is the ECB raising, is it low, really the nuts and bolts of how the economy grows.
Also with the earnings, the 2016 guidance and what companies are seeing going forward with the global slowdown, higher dollar.
Yeah, that'll be huge. Yeah,
so that's very important.
Yeah, especially considering it's third quarter earnings. But we're getting so close to 2016 now that we're into the fourth quarter. Yeah, they're going to be providing guidance in the next year. Look, especially when you have weak last year, companies really want to point out, hey, things are getting better next year, and that'll be a really good sign. That's a really good point.
Yeah, Ashley, you had some good points in the IMF meeting in Peru this past weekend.
All right, Bob, glad to share that. Actually, Bobby's right. The IMF has been meeting the last few days in Lima, Peru. Part of it, interestingly, the location is they were hoping to show much stronger growth Latin American economy and focus on that. And unfortunately, we're not seeing quite as much of that. However, what we wanted to mention is about 2 years ago, one thing that we mentioned as far as IMF was concerned that's important is a lot of times when you have a global slowdown like this, many times emerging nations can lead you out. And we mentioned on the vlog a couple of years ago that part of the problem you had with that, whether it was a Brazil or India, you can kind of name your country in that category, is that there were a lot of structural reforms that still long-term needed to take place for those to really grow long-term. For example, in India's transportation infrastructure, power infrastructure in the middle of the country is one example. when you have a country like China that really had been superheated for a while, that was selling a lot of commodities, and a lot of those nations just sort of relied on that for a while, and they didn't do a whole lot of structural reform that really would help us in growth now. But the problem is, the guys and I were talking about this more, if you look at Brazil, for example, they don't have nearly the balance sheet strength now to do it that they could have 2-3 years ago. So that's a problem, and that's one of the reasons that the IMF data has really got us at the lowest growth internationally since the 2008-2009 crisis. And we've said that among us, this triad we've had, it seems like for years now, we've had to talk about it so much, but it's been true, of the Federal Reserve uncertainty and the rates, the commodities, and really when you look at the other, it's what China is doing in growth. The central bank president of the UK said, and we thought it was a good way to say it, that's creating a very unforgiving environment. Yeah. But if some of these countries had gone with some better structural reforms a couple of years ago, when we were talking about that, I think they would be able to lead much more out of this. And unfortunately, we're not seeing that.
Yeah, you can cover up a lot of issues with when oil is at $100.
Yes, you can.
And you're printing money.
Absolutely.
Oil companies.
Absolutely. And, those are like anything, those were the easy solutions. And the hard solutions long term would have led to some better growth now, but they weren't undertaken.
They didn't make them. Now they're going to be forced to.
Yes, exactly. And it's a much harder environment to do it in now.
Yeah. Well, Greg is in client meetings. He'll be back with us next week in the vlog. Well, thank you for watching. Please send in your comments, questions, email us, call us, and forward to family and friends if you think it will be interesting to them. Thanks so much for watching. Have a great week.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.